Welcome back then. Thank you so much to my colleague Nzinga Qunta for holding down the fort until now. Then let's get into the market picture then as we kick things off back here at the Johannesburg Stock Exchange. Mixed picture across the board then for the Asian markets, pretty much similar to yesterday. In fact, only the Shanghai Composite though managing to go a little bit higher, even if it was only just a tenth. 0.5% weaker though for the Hang Seng out in Hong Kong, with a slight fall for the Nikkei there, as you can tell that market picture. Again, mostly negative as well out in Europe, with the FTSE 100 still managing to gain, however, 0.2% there. The picture in Europe has certainly seen quite a few countries there see another resurgence in the COVID-19 cases, meaning that more weakness in that market picture, growth unlikely to get any bigger and any further than it currently stands. So weakness is certainly going to be the order of the day, and as you can tell, in the red as well for the remainder of the markets too. On the local board, we're also down again, this time back below 55,000 points, 54,705 in fact. In this lunchtime trade, we're 0.33% weaker. The biggest losers thus far being the resource counters, having gone down 1.8%. The diversified miners playing a huge role in that, while the platinum and gold shares as well have dropped off more than 1.1% each. So a big fall over there. Industrials did manage to tick higher though, but it wasn't enough to unfortunately affect the bourse too much in terms of getting up today, while we're seeing only marginal gains then for financials as banks have gone up nearly 1% in this lunchtime trade too. In terms of stocks or companies that have actually gone up today, the likes of Cap Holding as well have also gone up, sitting there. So Capitec enjoying a good day across the board, going up 2.7% there to sit now at, what is that, 1,243 rand a share, should I say there. Telkom has also enjoyed some good numbers today, 27 rand 86 cents a share, should I say, 2.5% better off, with Truworths as well enjoying some good numbers, 2.4% stronger, 34 rand 47 cents a share over there. In terms of negativity though, we do have quite a few, the likes of Long for Life as well, with Steinhoff as well dipping down on that front. Sasol has also taken a hit, sitting below 100 rand a share, 98 rand 36 cents a share. It's gone down 4.2% in this lunchtime trade. Over into the commodities board then, a slightly better picture for the Brent crude price, arresting that more than 3% fall overnight that we saw in the oil price. It now sits at $40.82 a barrel. 874 then is the price of platinum. Below $900 a barrel an ounce is where it seems to continuously stay at this time, even though it is slightly higher, 0.75%, pretty much flat stance for the gold price. That's at $1,901 a fine ounce there. Strength for the local currency as we head towards President Cyril Ramaphosa's address, then an oral response to questions in Parliament. That's happening in a few minutes, in fact in around 40 minutes or so. That's when that's set to happen. Also we have the medium-term budget policy statement, which is set to come out tomorrow as well from Finance Minister Tito Mboweni. That is bound to create a few jitters as well in the market. But for now though, we're sitting pretty actually, despite this sitting in red. It means that the local currency has strengthened 0.75% to sit at 16 rand and 10 cents. Against the euro, we're sitting at 19 rand and 3 or 4 cents against that combined currency there. We're also a similar mark strengthened there as well, and below 21 rand a pound is where we're sitting there as well. A similar mark strengthening on that front too. All right. IG South Africa's Shaun Murison joins us as well then as we get into some video, some analysis rather, should I say, of the markets. He does join us via video link. Shaun, thank you so much for the time. Bit of a mixed bag when one takes a look at the likes of Asia, the likes of Europe as well, and we are down locally. Is it a few jitters perhaps because things don't necessarily look too great on the market front, or is it just the jitters ahead of the election out in the United States?
I think less. I think the election will have an impact on the market, but it's not the primary concern right now. I think at the moment it's really about that US stimulus, and we're hoping to get that stimulus granted before the US elections. And at the moment it's looking less likely. And you couple that with what is a surge in coronavirus cases in the US and Europe, further lockdown and obviously further disruption to the economy.
And as you said, we're unlikely to get that stimulus, it seems. The market would surely have priced this in now, knowing that things look like they're going to be delayed more and more. And really taking a look at the time, we're less than 2 weeks away from that election on November the 3rd. Is the market getting a little too greedy with regards to that stimulus package? Perhaps just waiting until after November 3rd might be a better bet?
So I think the market's getting what we do think of when the stimulus is coming rather than if. And I think if you have a Democrat win, then it probably means more government spending, more stimulus. And so I think that's part of the reason why we're seeing a bit of that dollar weakness at the moment, which is, reflecting in our local currencies. In terms of the elections, market does look for certainty. At the moment, it looks like the Democrats have quite a good lead in the marketplace right now, and that's and that reduces the likelihood of an election being contested, which is also creates a little bit of certainty. But right now, I think it's all about economic disruption, U.S. stimulus. Those are the common the major themes dictating market movements in the short term.
All right. The local currency strengthening today ahead of President Cyril Ramaphosa's speech then, as well as the MTBPS. Is that a local factor, or is that because the dollar may have weakened, having seen quite a bit of negativity as well from the Wall Street market last night, and this morning certainly not doing too well as well out in Asia?
Okay. I think in the short term, I'm quite surprised at the rand's strength, especially considering today seems to be a bit of a risk-off market. However, we've said for a long time that there's a case to be made for investment in the rand. The rand does look undervalued when you look at the sort of pricing parity power of the currency. And then we also, if you look at the global market environment right now, we're in a low yield and low global yield environment, and South Africa yields are obviously a lot higher, so that promotes a carry trade opportunity. I'm not sure that the domestic reasons are cause for the currency strength. We are seeing a lot of the other emerging market currencies also slightly firmer at the moment as well, with the exclusion of the Turkish lira and maybe the Russian ruble. So I would still argue that the short-term movements are dictated by international events rather than the local catalysts.
So what do you think then happens tomorrow? I mean, fact of the matter is we're going to have to see some sort of spending increase because the president has announced that reconstruction and recovery plan. That's bound to not fare well for investors who may fear that our debt is certainly going to spiral even higher.
Yeah, so I mean GDP, debt to GDP is now expected to be, we've passed 80%. 80% of GDP by the end of the year, which is not good. We do need to spend more to accommodate for the president's economic recovery plan. Unfortunately, at the moment, we have a situation where, due to lockdown and also a week just before lockdown, even a weak economic environment and weak tax collections, so government's bringing in less money to spend. So it really is a real fiscal tightrope that Mr. Tito Mboweni has to walk.
Is 1900 the ceiling perhaps then for the gold price, currently sitting at $1,901 a fine ounce? Is that the ceiling?
I don't think so. I think for the last 3 weeks, looking at the gold price has actually been quite frustrating. It's literally done nothing. It seems to have settled around this. It's 19 to 1930. And you know me, I've been quite bullish on gold for quite some time. At the moment, it is frustrating. So we're watching this short-term range, call it 1880 to 1930 dollars per ounce, and we're waiting for a breakout of that range if you look at on a technical level. Gold likes to rally on, as it's a protection against inflation, and what we have at the moment is actually no real inflation at the moment. So yeah, it does also usually track a weaker dollar, but we're not getting that at the moment either. I mean, we're not getting the run in gold either. So we just have to wait and see. I think the next bout of volatility and when we could maybe see a breakout occur, whether it's to the upside or the downside on gold, possibly leading into next week's the November 3 elections. And I think where that would be a surprise move on gold would be if election is contested or is very, very close or the results are delayed.
Yeah, it certainly looks like it might go that way, so it'll certainly be very interesting there. But Shaun, appreciate the time. Thank you so much for joining us this afternoon. Shaun Murison is from IG South Africa, helping us get to grips then with this market picture. A bit of a mixed one. Negative on the local bourse, though, around 1/3% weaker than in fact, with only the resources as well being the big ones to impact the market. They're going down nearly 2%, in fact, while industrials did manage to tick a little bit higher. Overall, though, the market picture does seem to be mixed. Will it continue to be so? Well, we'll continue to have more news for you right here on SABC News.